Tesla's biggest bear, Gordon Johnson, is back with his negative commentary after Tesla's record quarterly report. And with perfect timing too, since Tesla shares were down the other day when this interview took place. It's a great time for bears to come on CNBC, since it makes it seem like something is wrong with Tesla stock. In this video, we'll be going over Gordon Johnson's thoughts about Elon Musk's compensation package and how he's interpreting Tesla's results in the most negative way possible, and leaving anything positive out of the conversation. I'll also discuss some news on Tesla's Giga Berlin being delayed by 6 months, since it's related to most of Gordon's points. Let's jump right in. Before we do, stop using Yahoo Finance, stop using Google Finance, and check out our website, themarketisopen.com, where we have instant stock quotes and financial data for every stock going back 10 years, and it's all freely available. So Tesla mega bear Gordon Johnson comes on CNBC just a few days after Tesla reports its earning results. Keeping in mind that the first quarter of the year is seasonally weak for Tesla, they also fought through a global chip shortage which caused other automakers to shut down factory plants. Yet Tesla was able to deliver a record number of vehicles at 185,000. All but 2,000 of those vehicles were either Model 3 or Model Y, so Tesla is truly hitting mass production, showing the validity of their efforts and their newest Giga Shanghai factory in China, which clearly was able to output record Model Y vehicles. Only 2,000 Model S and X were sold, but that's because Tesla's preparing its Fremont factory for the Plaid powertrain, which is likely to decimate the premium car space with next-level acceleration, range, and a gaming system built in. Tesla was able to show record EBITDA and record net income as demand isn't letting up for their products, and as a matter of fact, Elon Musk stated on the conference call that demand was the highest they'd ever seen in the first quarter. And so who better to bring on the show to discuss Tesla's achievements and their vision for the future than Gordon Johnson, who had a $20 price target for Tesla, has been completely dead wrong about the stock over the last few years, and only has negative things to say about the company. The interviewer, Andrew Ross Sorkin, starts by asking Johnson about Elon Musk's stock compensation plan, noting that even though Elon Musk is getting these shares based on the milestones set out by Tesla, he has to hold the shares, and so he could make money if the shares go up and still lose money if the shares go down. Gordon Johnson counters by saying that Tesla has a whole bunch of one-time gains in the quarter.
Again, the company lost a significant amount of money excluding one-time items. There was an accounting change of $145 million, $518 million in credit sales that they said are going away by the end of this year, and $101 million in one-time Bitcoin trading revenue. You take those away and they lost $227 million.
He mentions a $145 million accounting change. This was a decrease in Tesla's net interest expense. He also mentions that emission credit sales should be taken out since this isn't part of Tesla's core business, and these should disappear by the end of the year. I agree that credit sales will eventually disappear, but I think he said that last year as well. Actually, Tesla reported a huge year-over-year increase in credit sales. I think it was about a 70% increase, and this was a record for credit sales in the quarter. This is free money for Tesla that they get for selling credits to their competitors. So competitors are funding Tesla's business. There aren't too many other businesses where that happens. Tesla can reinvest that money into the business, $500 million just in this one quarter, and although it's considered one time, it's going to continue throughout the year and perhaps into next year as well. Tesla can build a quarter or a third of a gigafactory with just that money from this one quarter. So by the time the credits run out, I think Tesla will be well positioned in the market and so profitable that the credits won't matter. But analysts like Gordon Johnson tend to only focus on the short term and completely ignore the most important thing for investors, which is growth. Gordon Johnson also takes out Tesla's Bitcoin trade. This makes sense since it's a one-time item, but what a great trade for Tesla to make another free $100 million of locked-in profits using the cash that they had on hand that was sitting there doing nothing. Plus, Tesla still holds about $1.3 billion of Bitcoin. So Gordon says Tesla lost money selling cars, but what's interesting is that he purposely forgot to take out one-time stock-based compensation expenses. Tesla had about $600 million of share-based compensation in the quarter, and about $300 million of that was attributable to Elon Musk's one-time bonus. And I say he purposely forgot, it's not a mistake, because last time Gordon was on CNBC, he admitted that it was fair to take that out as well, so it's easy for him this time to miss things that don't support his argument. Now later in the interview, Andrew Ross Sorkin asks a question with regard to the compensation plan. He says, "Do you think Elon Musk is purposely trying to effectively manipulate the price valuation of the company to capture the compensation arrangement?" Now that's kind of a weirdly phrased question by the interviewer, especially given that really the compensation is triggered by revenue and EBITDA, which are a little bit difficult to manipulate. Maybe he's trying to get Johnson fired up, but Johnson does avoid to answer his question. Gordon's next argument is on the basis that Tesla's Berlin factory is going to be delayed by 6 months. He says that the street is expecting 150,000 cars from Giga Berlin, and now that's going to be cut in half due to the delay. There had been some news about this, but it looks like it was debunked by the German minister. The delay didn't make much sense to begin with, since Tesla said that Giga Berlin was on track to begin delivering vehicles by late 2021, and so a 6-month delay would still put them around that time. Tesla had also just told us that the equipment was being moved into the factory, the stamping press, the paint shop, and we know when that was the case in Shanghai, the factory was able to start production just a few months later. Now, although I'm expecting about 1 million vehicles to be delivered by Tesla this year, I'm not really expecting much from Giga Berlin this year in order to contribute to that, so anything would be a bonus. But I think it's important for short sellers to jump on news like this and take Tesla stock down while they still can, because once the factory comes up, it's going to drastically reduce Tesla's import costs in Europe, because they currently have to import all of the cars that they sell, and they're going to be on the home turf of the major automakers selling a superior product. The Giga Berlin Model Y is going to have improvements in paint, battery, manufacturing, and more, far above even the current Model Ys. So I think once this factory is producing vehicles, the short sellers aren't going to have much to pick on. Gordon goes on to say that Tesla's goal of having Model Y be the best-selling vehicle in the world in 2022, he says there's no way that's going to happen now that the German plant has been pushed out.
Their German auto plant, right? As recently as this past Friday, Tesla's IR was telling people that that plant was on pace to start producing cars in the fourth quarter of this year. So over the weekend, they delayed that plant by 6 months. And keep in mind, he said they're going to have the Model Y is going to be the top-selling car in 2022. We believe there's no way that's going to happen now that the German plant has been put out. That German plant was 100% Model Y initially.
So now that we know that this is still on track, I guess he must believe that Tesla has a pretty good chance of actually hitting that target. He also says that Tesla is trading at 2,466 times earnings. So are we looking at the same company? The current PE ratio based on GAAP earnings is about 676. Actually, Tesla's non-GAAP earnings per share last year was $2.24. So based off that, they're actually trading at 300 times earnings. Now that's still a high number, but there aren't too many mega cap stocks that are growing earnings at over 100% per year right now, have a massive opportunity ahead, and are spending like crazy to dominate this market. The last point makes Tesla very similar to Amazon, which traded at over 1,000 times earnings for many years until people realized how profitable they were and how fast they were growing. Years later, Amazon now trades at about 63 times earnings. If Tesla meets next year's analyst estimates, they'll be trading at 100 times earnings and still be in the early stages of their growth trajectory. Finally, the interviewer asks Gordon how he would trade Tesla stock this week because Elon Musk is appearing on Saturday Night Live, and Johnson replies by saying that he thinks this week analysts will cut numbers this year given the delay of the German plant.
Right. So the way we would trade it this week, Andrew, is we think that the street is going to have to significantly cut their numbers next year, given this German plant has been delayed 6 months. That's 150,000 cars of capacity is down 75,000. Okay. So we would actually be selling the stock ahead of the street adjustments lower.
So first of all, I think most of what Gordon has to say is based on the Giga Berlin plant being delayed. Because that was debunked, most of what he has to say actually makes no sense right now, and there would be no reason for the street to cut estimates. In terms of Saturday Night Live, I think it's a dumb question because I don't see the point of trading Tesla in the short term when it seems like there's a lot of catalysts over the years to come. The SNL appearance, in my opinion, is just noise and there's nothing to do with the fundamentals of the company in there. Earlier, they're talking about how emissions credits aren't core to the company, but that is real money. And now we're talking about trading the stock because of Elon Musk appearing on a show. That has nothing to do with anything Tesla does. If anything, if the show does well or flops, it's free advertising for Tesla and it's probably going to bring more attention to the brand. But this isn't the first time Elon Musk has appeared on TV, and I think the mainstream media will spin it negatively no matter what happens. In the end, I think bears like Gordon Johnson love to latch onto and spread misinformation. He has the worst track record out there on Tesla. If you did the opposite of what he had said, you'd be up huge. and yet CNBC keeps bringing him on the show, especially after earnings. But it seems that when things actually come to fruition for Tesla, and people realize what they've missed by listening to Johnson, it ends up sending the stock price much higher. Well, I hope you enjoyed this video. What did you think about the points that Gordon Johnson brings up, and do you agree with my counter arguments? What effect do you think Elon Musk appearing on SNL will have on Tesla stock? Also, please hit the like button and subscribe, and a huge shout out to our patrons that help to support our channel. Your support helps us to continue to make great content. Thank you guys so much for watching.